Do you own a home? If so, then it is crucial for you to file your taxes correctly in order to take advantage of all the tax deductions and benefits of being a homeowner. However, even though homeowners can qualify for a number of tax benefits, many make a variety of tax mistakes that can result in problems with the IRS. Welcome back, guys. My name is Karlton. This is Taxes Made Simple, a channel where we teach tax education broken down in a simple format. And in today's video, I'm going to go over the 3 biggest tax mistakes with home ownership. Make sure to watch until the end because you do not want to miss any of this information if you're going to plan on being a homeowner in the next year. Let's dive in. All right, guys, mistake number 1, trying to rent your house to yourself. This is a classic tax mistake for homeowners. Some homeowners, especially those with high value properties, wonder if they can save on taxes by renting these properties to themselves. Property owners often think about this because of the value of the mortgage exceeds $750,000. And then the interest that they can write off on Schedule A is capped. So some homeowners try to rent their homes to themselves in order to try to get around these deduction caps. The theory behind this strategy is that you can classify the property as a rental, then all of the property taxes and interest could be deducted without any sort of limitation. However, this is a big mistake because in most circumstances, the IRS will not view this as legitimate. The reason why the IRS will not allow you to do this is because there is a lack of economic substance. Economic substance is a doctrine under the United States tax law that disallows tax benefits under Subtitle A of the Internal Revenue Code if the transaction that produces those benefits lacks a business purpose. Under Section 7701, a transaction has economic substance if the transaction changes in a meaningful way, apart from federal income tax effects, the taxpayer's economic position, and the taxpayer has a substantial purpose from federal income tax for entering into such transactions. So in other words, if there is no other reason for you to rent your home to yourself other than to get tax benefits, then the IRS will most likely not allow you to do this because it lacks tangible business purpose. So unfortunately, some people still try to do this, and oftentimes they end up getting into trouble with the IRS and call me. Trying to rent your home to yourself can be a major red flag to the IRS and can increase the odds of you being audited. Mistake number 2, claiming too much for the mortgage interest deduction. Just as some people make that mistake of trying to rent their properties to themselves without any type of legitimate reason, there are also people who are making the mistake of exceeding the mortgage interest deduction that they are allowed. This is either because they're unaware of the cap for property values above $750,000 or because they think that the IRS will not notice it. If your home has a value that is above $750,000 and you try to claim mortgage interest deductions for mortgage values above $750,000, you could potentially face fines and other negative consequences. So just to reiterate, you cannot get around the mortgage interest deduction cap either by renting your property to yourself or by deducting more mortgage interest than the IRS allows. If you have a property that exceeds $750,000 in value, then you will just have to deal with the fact that you cannot deduct the mortgage interest expense for mortgage values above $750,000. All right, guys, let's jump into mistake number 3, deducting the wrong year property taxes. The general rule of thumb for property tax deductions is that you can take a tax deduction for property taxes in the year you actually paid them. A lot of people get confused about this, and I don't understand. To understand this concept, imagine that you paid your property taxes in this year 2022. If this is the case, then you get to take a tax deduction for property taxes for tax year 2022. If you wait to file your taxes until 2023, this does not mean that you are allowed to deduct property taxes for 2023 on your 2022 tax returns. You have to be careful about this because this is another red flag with the IRS that can definitely lead to an audit, especially if there are other red flags in your tax return as well. The good news though is that if you correctly deduct your property taxes for the right year, then the property tax can actually be quite significant, and you can actually deduct up to $10,000 of property tax deductions or up to $5,000 if you're married filing separately. Now, there are some other property tax rules to be aware of. Now that we've gone over the 3 of the biggest tax mistakes that people commonly make with home ownership, let's quickly discuss some of the other important property tax rules. If you own other property besides your primary home, this too can be subject to property tax deductions. And in fact, you might be able to get tax deductions for all of the following types of real property if you own it. 1, vacation homes, 2, land, 3, co-op, apartments, and much more. The IRS does not allow property tax deductions for many types of property related items though. Some types of property related items that you could be thinking of that the government is not going to allow for you to take as a tax deduction is assessments for building sidewalks, streets, water or sewer systems. Maybe your neighborhood has transfer taxes on the sale of a house. Maybe there's some home association assessments and payments on loans that finance energy savings in your home improvement. These items are not considered tax deductible items as a part of your property taxes. Next, let's go over how to deduct property taxes correctly. If you're a homeowner and you want to deduct property taxes correctly, then there are a few steps that we're going to have to take to make sure that we're in charge of this. Organize your tax records. You need to make sure that you have all of the documents and details that are necessary to deduct property taxes correctly. Exclude everything that doesn't count. That includes everything that we just mentioned, such as property you do not own, assessments for buildings and sidewalks. And by the way, use Schedule A when you file your returns. This is the best way to deduct property taxes. However, if you choose to go through this route, you will have to itemize your taxes instead of taking the standard deduction. Some people might find that this is a little tedious, but if it results in bigger tax savings, it can be well worth it and a routine that you should get in the habit of doing. Deducting your property taxes year over year is a tax deduction that's given to you, so you want to make sure that you're taking it. IRS does not give out a whole lot of deductions. So we need to really avoid being reactive and start being proactive with our taxes. All right, guys, to conclude this, if you are new to deducting these type of expenses with property taxes, being a homeowner, it is totally normal to be a little bit confused and overwhelmed. So if you fall into this category, then don't worry, you're not alone. The good news is that you're probably going to get used to this as time goes on. But to avoid getting into trouble, I wanted to make sure I put this video out there and make sure that you follow this video so you can avoid these common 3 tax mistakes. As a reminder, mistake number 1 is trying to rent your home to yourself. So if you're not leveraging the Augusta rule, then you cannot take this deduction. Number 2 is claiming too much for the mortgage interest deduction. And mistake number 3 is deducting the wrong year for the property taxes. Get help if you need it. It is also helpful to remember that if you don't just want to deal with filing taxes yourself, or if you have questions about any of the topics that we are going over today, you can get in touch with my team. My firm is ready to assist you and start providing tax planning services and assistance. You can get in touch by visiting the link below. Now, if you're somebody that's looking to learn at home in the comfort of your own house, feel free to click on the Tax-Free Living bundle. We have created a list of courses and additional information to assist you on your journey to becoming a tax saver. Look forward to seeing you guys on the next video. I sincerely hope that this helped you. I'll see you soon.